Evergrande Filing Chapter 15, Bankruptcy in China, the Saga of China. Evergrande Group, a real estate giant, once towering over China's economic landscape, has taken a dramatic turn as it seeks shelter under Chapter 15 bankruptcy protection. This seismic development, along with its ripple effects, isn't just shaking up the real estate market, but is casting shadows on stock markets and even reaching the dynamic world of crypto. Let's embark on this journey as we dive into this financial roller coaster, one that has sent shockwaves through real estate, stock, and even crypto markets. But before we begin this video, we would like you guys to subscribe to the channel, like this video, and hit the notification bell icon so you do not miss out on amazing and entertaining content. Founded in 1996 by Xu Jiayin, Evergrande grew rapidly during the Chinese housing boom. What set Evergrande apart was its unique borrow-to-build strategy, which involved amassing significant debts to fund its ambitious projects. By a certain point, the company had ballooned to employ a staggering 200,000 individuals and had spread its influence across more than 280 cities, posting over 1,300 projects under its belt. Yet, as time progressed, Evergrande's narrative began to shift. It transformed into a symbol, embodying the very essence of China's real estate turmoil. The year 2021 witnessed a pivotal moment as Evergrande found itself shackled by a daunting $300 billion in liabilities, leading to the fateful day when it defaulted on its debts. This default rippled across the industry, triggering a series of defaults among other construction firms. The Chinese government's approach to the crisis seemed almost orchestrated, a controlled demolition, allowing Evergrande to persist in operation while shepherding it through a gradual descent. Enter the real estate debt crisis that befell China in mid-2021. This whirlwind of challenges forced a staggering 40% of Chinese home sales companies to fall into default, according to reports by Reuters. The fallout was vast. Incomplete homes dotted the landscape. Suppliers and creditors were left in limbo, and the very bedrock of China's economic growth, real estate, showed a 7.9% decline in property investment in the initial half of 2023. Kuya the scene where Evergrande takes a pivotal step towards redemption. The 32 billion foreign debt needed restructuring, and the legal avenue of Chapter 15 protection beckoned. This legal maneuver allowed foreign companies to seek shelter under U.S. bankruptcy laws, even if most of the proceedings happened overseas. A strategic move, as approval would shield the Chinese firm's U.S. assets from creditors battling the restructuring. The news about Evergrande seeking Chapter 15 protections spilled out from an unnamed source, painting a picture of a company maneuvering to regain its footing. March saw the emergence of a restructuring plan, offering creditors a choice between fresh long-term bonds or a blend of shorter-term bonds interwoven with equity-linked instruments. These instruments as being supported by shares in Evergrande itself, or even its separate entities listed on Hong Kong Stock Exchange, property services, and electric vehicle units. The restructuring plan hung on the precipice of needing endorsement by a whopping 3/4 of Evergrande's creditors. The spotlight shifted to hearings scheduled later this month in not just one, but 3 significant locations: Hong Kong, the British Virgin Islands, and the Cayman Islands. The stakes couldn't be higher. To add to Evergrande's woes, it was already entangled in several lawsuits post the 2021 debt default, including a winding-up petition that, if successful, could spell the immediate liquidation of the company's assets. As the chapters of Evergrande's saga unfold, its ripple effects intertwine with China's broader real estate crisis. Evergrande's initial default on its offshore debt back in December 2021 acted as a seismic trigger, setting off a liquidity crisis that reverberated throughout China's real estate landscape. The clouds of uncertainty cast its shadow over home prices, exerting an additional squeeze on already struggling developers and pushing them to the brink of their own potential defaults. In a shocking twist, the scene soon expanded to encompass other players on this intricate stage. Like dominoes falling, several private developers found themselves ensnared by the web of defaults on their offshore debt. The most recent casualty to succumb to the pressure is Country Garden, stumbling with a missed interest payment, and now issuing a stark warning of a staggering $7.6 billion potential loss in the first half of this year. Evergrande's own financial narrative reads like a tragic tale of lost fortunes. A staggering combined loss of $81 billion over 2021 and 2022 painted a bleak picture. The company's revelations, coming forth in July and preceding its debt restructuring hearings, only added to the sense of urgency. The crisis's tendrils continue to snake their way into different corners of the economy, with echoes reaching even China's $3 trillion banking sector. Meanwhile, the cities are suffering from decreasing home prices, as official statistics reported a 0.2% dip in July when compared to June. However, experts suggest an even steeper fall, with major urban centers like Shanghai facing plummeting values of at least 15%. Even those traditionally thought to be fortified against such turmoil, the state-owned developers, are beginning to exhibit signs of strain. An increasing number of 18 state-owned enterprises have raised red flags about potential losses in the first half of the year, a stark escalation from 11 in the prior year, and a mere 4 before that. As the curtains draw on each chapter of this real estate crisis, it's evident that the repercussions are profound. With China striving to emerge from the throes of the COVID pandemic, the crisis exerts an additional weight on an economy already grappling with the burdens of low consumer confidence and a pressing challenge of high youth unemployment. The intersection of these factors is shaping a narrative of uncertainty, underscored by the pressing need for strategic solutions to mend the fabric of China's economic recovery. The far-reaching implications of Evergrande's turmoil reveals the interconnectedness of China's economic dynamics and the global financial ecosystem. Evergrande's current mess isn't an isolated instance, but rather a mirror reflecting broader issues deeply entrenched within China's economic framework. A trio of challenges: waning demand, towering debt, and an aging population unite to form a complex puzzle. These challenges, likely to persist, cast a looming shadow over China's economic landscape, with potential ramifications that extend beyond its borders, indirectly influencing global financial stability. The Evergrande saga has inadvertently cast its shadow over the U.S. bond market, sparking recent surges in long-term bond yields. Market players, while reevaluating China's economic resilience, have the Evergrande crisis as a backdrop. This revaluation holds implications. A weakened Chinese economy could dampen the demand for U.S. assets like treasury bonds, potentially nudging interest rates upwards on U.S. soil. While the U.S. real estate market holds a distinct edge in terms of size and stability, the Evergrande incident could still resonate. As Chinese demand for U.S. real estate potentially wanes, downward pressure could emerge on property prices, albeit in a more muted manner. However, the global footprint of Evergrande's default is hard to overlook. Asia-focused pension and investment funds are grappling with substantial losses, and if left unchecked, these losses could spiral, impacting other markets. This unsettling situation stands as a stark example of the volatility inherent in emerging markets. Evergrande's tumultuous phase serves as a glaring spotlight on the fragility of China's housing sector, an essential pillar of the country's economic growth. If Evergrande's situation is like a warning signal for the health of the real estate industry, there might be more problems ahead where other companies could also fail to pay their debts. This could cause trouble for the global economy. There have been recent events that make this worry even stronger. A big company called Country Garden, which used to be really successful in building things, had trouble paying back the money it owed to people who had given it loans. They also said that they wouldn't make as much profit as they thought they would. The company even had to stop trading some of its bonds in China's market, which added to the concerns. China's real estate industry is a big part of its economy. It makes up about 30% of the country's total economic activity. Even though the government has tried to help the real estate industry, investors are still worried. The leaders of the country have shown that they want to support the real estate industry, and they're letting local governments make special rules to help it. In the middle of all this chaos, Evergrande's problems show that China's real estate industry has some big weaknesses. This could have a big effect not only in China, but also in the world. While the direct impact on the real estate market in the United States might not be huge, the bigger picture of the global economy could feel the effects. As the story of Evergrande unfolds, it reminds us that the strong global economy is delicate and can be affected by problems in different parts of the world. Now that Evergrande has chosen to ask for Chapter 15 bankruptcy protection, things are starting to calm down a bit. But the effects of this choice are still being felt all around the world. The different parts of the economy, like real estate, stocks, and even digital currencies like cryptocurrencies, are all connected. They've come together to create a big picture of how money and finance work, and this picture is changing because of what Evergrande did. What are your thoughts on this unfolding narrative? Are you feeling the aftershocks in your investment portfolio? Drop a comment below. Don't forget to like and subscribe for more insightful updates on the ever-evolving world of finance.